We have already finished two units. Basically, I hope everyone knows what we're doing here. We have we are taking up the additional syllabus, right? Additional chapters added to CA Foundation from your June attempt. So, out of the five chapters, we've already finished two. That is the first one, bonus issue and rights issue, and then we discussed about the redemption of preferences. So, redemption of preferences is done. Today, we're going to discuss the next edition from in the company accounts chapter, that is redemption of debentures. Okay. So now, first of all, some common discussion, whatever we have done before. What is redemption? What do you mean by redemption? Is first we will discuss. So as we already know, redemption means repayment, right? Redemption means repayment of uh, money, repayment of money. That repayment could be of preference shares, as we discussed earlier. Shares are generally not repaid unless those are redeemable preferences. Equity shares are not repaid generally, right? There's a concept of buyback of shares, but there's no repayment of capital. But there are types of, there's a condition in India that you have to issue shares, preference shares, which will be redeemed within a period of 20 years. So that is why we have the concept of redeemable preferences. We discussed in detail what are redeemable preferences, what is Section 55, which puts lots of rules on the redemption of preferences. Now, in today's lecture, we're going to discuss the redemption debentures. Very simple. Earlier in our intermediate, to foundation syllabus now. What are we studying here? And your redemption of debentures means repayment of debentures. So just like also the debentures will be repaid at a fixed amount, fixed initial itself by the debenture holders and the company. There will be an agreement between the debenture holder and the company. As per that agreement itself, a company will repay the fixed amount to the debenture holders on a fixed date. So that repayment amount could be, we've already discussed, the issue about what are debentures and how it is issued, what are the different prices, all of that we've already discussed, journal entries for issue of debentures, writing of the laws. So all that discussion has been already done. So now here we are purely discussing about redemption of debentures. So what are debentures? Debentures are nothing but debt instruments. It is an acknowledgement of debt, right? So debentures means acknowledgement of debt. So what companies may do is, now companies may need huge amounts of money for some expansion project or for some capital investment to buy some asset or buy some land, start a new product, right? Launch a new product. So for all of this, they need huge cash flows, cash inflows. So now that cash inflow may be created through different forms. So one is you could issue shares, or you could issue, securities, other securities like bond or debentures. So now here debentures, or even you can take a bank loan. You can go ask the banker to finance your project. So there are different modes of taking money or getting money, obtaining money for a company. One of the popular ways to raise money is by issuing debentures. So the concept of debentures is very simple. It goes like this. Now let's say I need 1 crore rupees. Okay, I need 1 crore rupees. Now, this 1 crore rupees is a huge amount, right? Let's say a banker, you're going to ask, can you give me 1 crore rupees? The banker might say, no, I can't take that much risk by giving you 1% 1 crore rupees. So that is why the banker might not give a loan of 1 crore rupees to me. So rather, what I can do is I can split this 1 crore into, say, 1 lakh units, 100 rupee units, like this 1 lakh units, I'll split this 1 crore. And I will tell people that boss, you have to just finance 100 rupees. If you have 100 rupees into multiple ಅಲ್ಲಿ ನೀವು ನಂಗೆ ಫಿನಾನ್ಸ್ ಮಾಡ್ಬೇಕು ಅಂದ್ರೆ ಲೋನ್ ಕೊಡ್ಬೇಕು ಸಾಲ ಕೊಡ್ಬೇಕು. You can give 100 rupees, you can give 200 rupees, you can give 300. You can buy how many ever units you want, but it is a borrowing for me. It's a loan, it's a non-current liability. So when I'm taking that money from you, you will ask me some questions, right? As debenture holders, put some conditions. As to this is loan. So this is loan. So loans will come at a cost. So you will have to pay me interest. So you will ask me, the debenture holder will ask the company, how much interest will you pay? What is the rate of interest? And how often will it be paid? That means the frequency of payment. Is it going to be paid every 6 months? Is it going to be paid every once in a year or every 3 months? How is the repayment working? So you'll ask that. I mean, interest payment working. So that will also be fixed. And because it's loan, you will have to pay the loan. So when I will be paying the principal amount, so that will also be up by the company. Now, that repayment is known as redemption. Okay, redemption can happen in three prices: redemption at par, redemption at premium, redemption at discount. So if the face value itself is paid back more than the face value, we call it as redemption at premium. If you're paying lesser than the face value, we call it as redemption at discount. Generally, redemptions happen at par or at premium. So our focus will be mainly on par or premium. Okay. So now here we have different concepts to discuss in this particular chapter. As I mentioned earlier to you, that this chapter has been added from the intermediate syllabus to your foundation syllabus. One of the 5 chapters which was noted from intermediate to foundation. But lots of concepts, I mean, important and good, a little difficult concepts intermediate which we used to have has been omitted. That means it is not there in your foundation syllabus. It's pretty much simple, very easy, and will not trouble you so much. You just have to focus on certain journal entries, which we'll discuss today. And then you are good to go. Okay. Now, first, I'm going to do it from the ICI material itself so that all of you have the ICI material, I hope. So it's easy for us to discuss the different concepts over here. So methods of redemption of debentures. This is the overview. Okay, we're going to see all of this in this particular chapter. By payment in lump sum, this is one shot payment. By payment in installments, where you redeem in installments. So if you've taken 1 crore rupees loan or you have issued debentures of 1 crore rupees, you don't give that 1 crore at one shot, rather you redeem it or repay it in installments. Then you have purchase in open market. So what you may do is this, like buyback of shares. You buy your own debentures from the secondary market. So your own debentures, you're paying money and you're buying it. So that way you exhaust those. You buy it and you take the paper off. That whatever that agreement is, that you tell it because you yourself had given this debentures. It's your company's debentures. So you're buying it back and you're exhausting it. Then you can also convert it into shares by conversion that into shares. So we don't have this part in our syllabus, although briefly they have introduced you. But in intermediate, this used to be there. This is the hard part actually, but that part has been removed from your syllabus. Okay. Now directly coming to the provisions. Why is this important? But before going there, let's write some notes. We will take down some notes before we start with the concepts in detail. First, right, with the heading redemption of debentures, under that introduction. Debentures refer to the acknowledgement of debt issued by the company It is a source of finance. It's a long-term source. Is a long-term source of finance to the company and is considered as a non-current liability. Non-current liability. An agreement is formed between the company and the debenture holders outlining various terms relating to the debentures known as a debenture deed. The debenture deed, the contents of the debenture deed contents of the deed will be the rate of interest, repayment dates, redemption amount, etc. Okay, so this is the basic introduction. Now let's talk a little bit about why do we study this and what is so special about this chapter. See, there are some provisions relating to redemption of debentures in the company's accounts. The government is always worried about the debenture holders. The reason being, debenture holders are people who have given money to the company but have no say in the decision making of the company. So these debenture holders don't have voting rights. These are not shares. Voting rights are only with the equity shareholder. So that is why the government comes in and protects the public, because debenture holders are part of the public, right? General public. So to protect their interests, the company that puts various conditions through rules. There's a specific set of rules for redemption of debentures put by the company that. We also saw earlier when we discussed bonus issue of shares, or rather not bonus, previous unit, redemption of preferentials. We discussed how Section 55 puts conditions, very important conditions, relating to keeping the capital base intact, right? The owners are being repaid, or the owners are being paid before the debenture holders are paid. So that is why the company that put some conditions on the debenture holder on the company before making the redemption of preferentials. The company that said the capital base must be same. For that, you have two options: you can issue fresh shares, or you can create CRR. There are two different ways of redemption of preferentials. All that we discussed. So here also in debentures, we don't have such CRR creation and all, but there are two requirements basically as per the company's rules. One, you have to create a reserve. You have to keep some money aside, profits aside every year, and you have to keep some money aside towards the redemption. We call it as the debenture redemption reserve. This reserve is kept aside because you should have some profits dedicatedly kept towards the uh, redemption part. So you can't give all the profits as dividends to the shareholders. Some profits must be retained by the company compulsorily for the sake of repayment to the debenture holders. So the DRR creation will be a requisite. And then the second one is not just doing the reserve, should also invest that money somewhere. So DRR investments are also a requirement in certain cases. So we will have to invest that money. So the government only will tell where to invest that money, when to invest. All of this, the companies act and the rules, the provisions will tell us. We'll read all of this. We'll see how it works. So these two important conditions are there in the case of uh, a company which has issued debentures have to create DRR and have to create DRR investment, certain types of companies. Now let's read about it. Let's understand about what this is. So first, debenture redemption reserve. So a company issuing debentures may be required to create a debenture redemption reserve account out of the profits for the distribution of dividends, and amounts credited to such account cannot be utilized by the company for any other purpose except for redemption of debentures. Such an arrangement would ensure that the company will have sufficient liquid funds for the redemption of debentures at the time they fall due for payment. So what it says is basically you have to create a reserve out of the free profits, whatever profits you've got. Out of that, you have to make some reserve before making any dividend payments. The profit and you distribute ಮಾಡೋ ಸ್ವಲ್ಪ ಹಣ ಸೈಡಿಗೆ ಇಡಬೇಕು profits and ಸೈಡಿಗೆ ಇಡಬೇಕು. An appropriate amount is transferred from profits every year to DRR, and its investment is termed as DRR investments. In the last year or at the time of redemption of debentures, debenture redemption reserve investments are encashed, and the amount obtained is used for redemption of debentures. So we will understand this more. Okay, now first let's understand who has to do the reserve. A redemption reserve ಯಾರೆಲ್ಲ ಮಾಡಬೇಕು ಅಂತ ಓದುವ. Section 71 of the Companies Act covers the requirement of creating a debenture redemption reserve account. I'm reading the section because you understand the basics properly, and then we can go to the problems. It's actually very easy, but I'm going into the law once. We're reading section 71, and then we will go to the question, problems, journal entries, and all of that. Where a company issues debentures under this section, it should create a debenture redemption reserve account out of its profits, which are available for distribution of dividend every year until such debentures are redeemed. So you have to create a reserve. That's all. How to create a reserve out of profits? What is the entry for that? P&L account will be debited to debenture redemption reserve account will be credited. We'll have to create a reserve out of the profit and loss. Simple. That's the journal entry. The amounts credited to the debenture redemption reserve should not be utilized by the company for any purpose except for the purpose aforesaid. What is the aforesaid purpose? Redemption of debentures is the aforesaid purpose. The company should pay interest and redeem the debentures in accordance with the terms and conditions of their issue. When a company fails to redeem the debentures on the date of maturity or fails to pay the interest on debentures when they fall due, the tribunal may, on the application of any of the account or the holders of the debentures or debenture trustee, after hearing the parties concerned, direct by order the company to redeem the debentures forthwith the payment of principal and interest thereof. So this is basically saying that the company has to make the payment of the debentures on the due date for redemption. If the company fails to do so, the tribunal means NCLT, National Company Law Tribunal, on application from any of the stakeholders may force the company to make the repayment. Okay, so all this you can read, but not very important. Now, how much DRR is to be created? Who has to create it? Let's read this. This is very important. As per Rule 18.7, this is given in the rules. The Act said 71 said specified companies, Section 71, right? said specific company should create DRR, specified amount must be made. So now who are these specific companies? How much is the specified amount? That we will read now. As per Rule 18.7 of the Company Share Capital and Debentures Amendment Rule 2019, the company should comply with the requirements with regard to debenture redemption, reserve, and investment or deposit of sum in respect of debentures maturing during the year ending 31st day of March of the next year in accordance with the conditions given below. So this list of companies will have to do DRR for all the investments, for all the debentures which are due for payment, maturing during the year ending 31st day of the next year. So 31st March of next year in the Olgade, 31st March next year in the 31st March Olgade, ಯಾವುದೆಲ್ಲ ರೀಪೇಮೆಂಟ್ಗೆ ಡ್ಯೂ ಆಗ್ತದೆ ಅಂತ ಡಿಬೆಂಚರ್ಸ್ ಮೇಲೆ ಅವರು DRR ಮಾಡಬೇಕು, ರಿಸರ್ವ್ ಕ್ರಿಯೇಟ್ ಮಾಡಬೇಕು. The debenture redemption reserve should be created out of the profits of the company available for payment of dividends to be defined. This they have kept mentioning. The limits with respect to the adequacy of DRR and investments or deposits, as the case may be, should be as under. So here they have given a list who has to create the DRR. All India financial institutions regulated by the RBI and banking companies for both public as well as privately placed debentures. So for them, no DRR is required. See, these companies, banking companies basically, are governed by the RBI Act. So the Companies Act is not putting any condition to them that you have to create DRR, ಅದೆಲ್ಲ ಮಾಡಬೇಕು ಅಂತ ಕಂಪನೀಸ್ ಆಕ್ಟ್ ಅಂತ ಕಂಡೀಷನ್ ಆಗ್ತಾ ಇಲ್ಲ. ಯಾಕಂತ ಹೇಳಿದ್ರೆ ಅವರಿಗೆ ಸ್ಪೆಸಿಫಿಕ್ ಆಕ್ಟ್ ಮಾಡಿದೆ. RBI has made RBI Act is there, Banking Regulations Act is there. So for them, again, Companies Act is not putting any additional rules for them. So they don't have to create any DRR. Other financial institutions within the meaning of clause 72 of section 62. Again, the RBI governs these other financial institutions, all these gold loan companies, housing loan, gold loan companies specifically, other financial corporations. DRR will be as applicable to NBFCs registered with non-banking financial corporations. Yeah, NBFC ಅಂತ ಹೇಳೋದು ಅವರಿಗೆಲ್ಲ applicable ಆಗ್ತದೆ. ಇವು ಡೆಪಾಸಿಟ್ಸ್ ಲೋನ್ ಎಲ್ಲ ಕೊಡೋದಿಲ್ಲ, ಬಟ್ ಬೇರೆ ಟೈಪ್ ಪ್ರಾಡಕ್ಟ್ಸ್ ಇರ್ತದೆ ಅವ್ರದ್ದು. For listed companies, all listed NBFC, no DRR is required. Other listed company for both, no DRR is required. So all unlisted NBFCs, no DRR is required. Other unlisted entities. So only for unlisted entities, which is not an NBFC, not an AIFI, that is All India Financial Institution, not a NBFC which is listed as a HFC. HFC means Housing Finance Corporations, like you have loan companies, right? Housing loan companies, HDFC and all. Was a HFC. So other companies are applicable. Other than that, other unlisted companies should do a DRR of 10% of the value of outstanding debentures issued. So ಎಷ್ಟು debentures issue ಮಾಡಿದ್ದಾರೆ ಅದ್ರದ್ದು 10% value of the DRR create ಮಾಡಬೇಕು. So this is all that the rule says. Just as DRR is to be created by all the companies which are not listed in the stock exchange. You know what is listed, unlisted, right? Which are not listed in the stock exchange, unlisted companies will have to do DRR. There are some exceptions to this. What are the exceptions? Banking companies don't, even if it's unlisted, don't have to do DRR. HFC, NBFCs, HFC means Housing Finance Corporation, NBFC means non-banking finance corporations, don't have to do DRR. Listed companies don't have to do DRR. Only because listed companies get SEBI regulations, SEBI guidelines are applicable after the Companies Act again is not moving its closer between. Only unlisted companies will have to do DRR. And how much DRR will be required? 10% of the value of the debentures will be the DRR requirement. So that's it. That is the requirement as per the rules, Rule 18.7 of the Company Share Capital and Debenture Amendment Rules 2019 puts this condition that unlisted companies other than the banking, finance corporations, and HFCs will have to do DRR to 10% of the face value of the debentures, outstanding amount of the debentures. Okay, investment of DRR. Now, this is also an important point. So, whatever, see, doing a reserve is different. Reserve is an accounting entry. You just keep some profits aside. Instead of keeping it in P&L account, you keep it in the reserve account. So, what that does is it puts a limitation, it puts a restriction that you cannot give that as dividend. So, such money will never be distributed as dividend. But you might keep that money in some non-current assets. Like you might invest that in building. There's no restriction like that, right? So can be invested anywhere. So you imagine the balance sheet on the liability side, you have a reserve. That money is there on the asset side. That asset, it can be in any form, right? It could be in cash, it could be in the bank, it could be in some other assets form also. So it could be in any form. But it won't serve the purpose. The whole purpose of creating the reserve was payment must be made on time to the debenture holders. So for that, the company that tells that DRR ಮಾಡಿದ್ರೆ ಸಾಕಾಗೋದಿಲ್ಲ, you also have to do DRR investment. ಅಂದ್ರೆ ಆ ಹಣ ನೀವು liquid form ಅಲ್ಲಿ ಎಲ್ಲಿಯಾದ್ರೂ invest ಮಾಡಬೇಕು. So the list is also given. How much is to be invested is also given. So all this you can read later, but basically how much is to be invested you see. As the case may be, a sum of which is should not be less than 15% of the amount of its debentures maturing during the year ending 31st March of the next year in any one or more of the following methods. So these are the specified investment methods. Illೇ invest ಮಾಡಬೇಕು. So in deposits with any scheduled bank, free from charge or lien. So you can keep it as ಡೆಪಾಸಿಟ್ಸ್ ಫಿಕ್ಸ್ ಡೆಪಾಸಿಟ್ ಆಗಿ ನೀವು ಇನ್ವೆಸ್ಟ್ ಮಾಡಿ ಇಡ್ಬೋದು ಹಣ ವಿತ್ ಎನಿ ಶೆಡ್ಯೂಲ್ಡ್ ಬ್ಯಾಂಕ್. ಸೊ ಆರ್ ಬಿ ಐ ಹ್ಯಾಸ್ ಅ ಲಿಸ್ಟ್ ಆಫ್ ಶೆಡ್ಯೂಲ್ಡ್ ಬ್ಯಾಂಕ್. ಸೊ ಅಂತ ಬ್ಯಾಂಕ್ಸ್ ಅಲ್ಲಿ ಮಾತ್ರ ನೀವು ಆ ಹಣ ಇನ್ವೆಸ್ಟ್ ಮಾಡಬಹುದು. ಅಂಡ್ ಇಟ್ ಶುಡ್ ಬಿ ಫ್ರೀ ಆಫ್ ಚಾರ್ಜ್ ಆರ್ ಎನಿ ಲೀನ್. ದಟ್ ಮೀನ್ಸ್ ಯು ಮಸ್ಟ್ ನಾಟ್ ಹ್ಯಾವ್ taken a loan against it, or you should not have kept it as a mortgage for any other loans or not. So it must be free of charge of any lien. The money should be available when you need it for repayment of debentures unavailable. Unencumbered securities of the central government or the state government. Then you have unencumbered securities mentioned in clause A, again Indian Trust Act. So all this you don't have to read. I mean, you don't have to remember. It's just saying government specified securities in the matra hana idbodu anta ಹೇಳ್ತಾ ಇದ್ದಾರೆ ಅಷ್ಟೇ. Okay, we'll just write some notes briefly and then we will go on to the journal entries. Journal entries are very simple, but we'll write some notes about debenture redemption reserve first. Debenture redemption reserve. As per Rule 87 of the Companies Share Capital and Debentures Amendment Rules 2019. Every unlisted company which is not a financial just you can write like this, which is not a banking company comma NBFC, that is non-banking financial corporation I'm summarizing whatever they have given in the table. I'm making it very simple for you. Non-banking financial corporation, housing financial corporation, HFC, clearly mentioned unlisted company. Okay, listed companies are not covered at all. Unlisted companies, invest a minimum of, or rather, will create a reserve create a reserve of at least 10% of the amount of debentures maturing maturing before 31st March the next year. A reserve, such a reserve is known as DRR, must be created by utilizing undistributed profits. Okay. Next, put the heading DRR investments. Companies required to make create DRR will also be required to invest a minimum of DRR is for 10%. The DRR investment is for minimum of 15% of the outstanding debentures maturing before 31st March the next year. Such investments will be made specific mode of investment specified by the government. That's it. So now let's go to the journal entries. Let's understand what and all we are supposed to do. at the time of issue while paying interest and all. So basically, we divide the life of the debentures or the entries, journal entries into three stages. One, the issue stage, then the regular routine entries during the life of the debentures, and then during redemption. So totally three stages we now divide the whole life, the journal entry process for debentures. Okay, let's write journal entries. Please draw the format for journal entries. Format entries. Let's write it down. Okay, very simple. Okay, pay attention. Very important. We are going to divide the entries into 3, 4, 5 like this. Totally, we have 12 entries. 3 entries at the time of issue, 4 entries, the routine entry, and then we have 5 entries leading to redemption. So 3, 4, 5. Let's understand first, initially, when the debentures are issued. To record the issue of debentures. Record the issue of debentures. So, one single entry I'm passing for this. What is the journal entry? We are receiving money. So, bank account debit to, I'm not saying debenture application and allotment and then transferring application and allotment to debentures. We're not doing that directly. I'm saying to dash person debentures. If the debentures are issued at a premium, then premium security premium account will be credited. If the debentures are issued at a discount, then the discount on debentures account will be debited. Right? So if there's a issue loss, that is discount ಕೊಟ್ಟ debentures no discount account debit ಮಾಡಬೇಕು. If it is at a premium, then the premium account will be credited. Security. Now, generally, what the companies do is at the point of issue itself, we will create the DRR also. DRR could create ಮಾಡಿಬಿಡ್ತೇನೆ ನಾನು. Although actually time ಉಂಟು. ನೀವು ರಿಡೀಮ್ ಮಾಡೋದು 1 ವರ್ಷದ ಮುಂಚೆ ಮಾಡ್ಲಿಕ್ಕೆ 31st March ನೆಕ್ಸ್ಟ್ ರಿಡೀಮ್ ಮಾಡ್ತೀರಿ ಅಂದ್ರೆ ಅದ್ರ ಮುಂಚೆ ಮಾಡ್ಲಿಕ್ಕೆ ಬಟ್ ಜನರಲಿ ಆರ್ ICI follows this the moment the debentures are issued itself the DRR is created. So to create DRR, debenture redemption reserve, which we also call as DRR. Is created through the profit and loss account, so P&L account debit to debenture redemption reserve. Also, the investments will be made 15% investment, right? DRR investments. The DRR is 10% of the amount of debentures. So 1 crore is the debentures issue ಮಾಡಿದ್ರೆ ಅದು 10%, 10 lakhs is the DRR ಮಾಡಲಿಕ್ಕೆ, 15 lakhs is investment ಮಾಡಲಿಕ್ಕೆ. Investment is an asset for the company. So DRR, investment account debit, it is an asset, so I'm debiting it to bank account. DRR investment period. These are the 3 entries at the point of issue of debentures. Then the routine entries. Routine entries, we have 4 entries. Okay, fourth entry, 4 more now. Totally 12 entries we're going to write. So now next, the fourth entry. Debenture interest will be payable, right? Periodically, regular routine again ಮಾಡ್ತೇವೆ ನಾವು. Interest ಕೊಡ್ಬೇಕು debentures ಮೇಲೆ. So interest again to record the debenture interest. The income or expense for the company, debenture interest. That's an expense for the company. So payment entry. Debenture interest account debit. It's an expense account. To bank account. Next. Now interest ಕೊಟ್ಟಾಯ್ತು. Now remember, ನಾವು ಸ್ವಲ್ಪ ಹಣ ಇನ್ವೆಸ್ಟ್ ಮಾಡಿದ್ದೇವೆ. FD ಇಟ್ಟಿರ್ಬೋದು, ಸೆಕ್ಯೂರಿಟೀಸ್ ಅಲ್ಲಿ ಹಣ ಹಾಕಿರ್ಬೋದು. ಅದ್ರ ಮೇಲೆ ನನಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಸಿಗ್ತದೆ, ನನಗೆ ಇನ್ಕಮ್ ಸಿಗ್ತದೆ. ಇಟ್ ಕುಡ್ ಬಿ ಡಿವಿಡೆಂಡ್ ಇನ್ಕಮ್ ಆಲ್ಸೋ, ಬಟ್ ಜನರಲಿ FD ಅಲ್ಲಿ ಇಟ್ಟರೆ ಇಂಟ್ರೆಸ್ಟ್ ಇನ್ಕಮ್ ಸಿಗ್ತದೆ. So to record interest or even dividends sometimes, generally it's going to be interest. It depends on what investment you're making. The government will tell you where to invest, FD ಮಾಡಬೇಕು, securities. So different forms of income ಬರ್ಬೋದು. But you'll receive some money on it. Bank account debit. So interest on DRR investment income. Done. Two routine entries done. Now you have to close it at the end of each year, right? Now close ಮಾಡಬೇಕು accounts ಅನ್ನು. So how do we close? How do we close it? We close it by transferring it to P&L account. This one is an expense. Debenture interest is an expense, so it will be debited to profit and loss account. So to close debenture interest account. This will be debited to the profit and loss. Similarly, we will have to also close the interest on DRR investments, whatever money we are receiving, that will be transferred to P&L as well, but that is an income. Crediting it to the profit and loss. Done. 4 routine entries done. So far, what have I done? I've passed 7 entries in all. 3 were relating to issue of debentures. What were the 3? First one, debenture hana receive ಮಾಡುದು. Second one, ಸ್ವಲ್ಪ ಹಣ ತೆಗೆದು reserves ಮಾಡುದು, P&L ಇಂದ reserves create ಮಾಡುದು, ಮತ್ತೆ invest ಮಾಡುದು. So 3 entries were done. Then we have 4 entries, routine entries, interest entries, and then closing those interest accounts. So interest ಒಂದು expense entry, debentures ಮೇಲೆ ನಾನು interest ಕೊಡಬೇಕು. And second one is the income entry. ನನಗೆ debenture interest income ಬರ್ತದೆ on this one, DRR investments. So other the entry. And then the third and fourth routine entries is transferring those expense and income accounts to profit and loss account. That's it. So 7 entries done. Very simple. Next, we have the redemption related entries. So redemption related, we have 5 things. Okay, 5 things will be done at the point of redemption. Now, what are the 5 things done at the point of redemption? First one, as usual, even in preferential redemption, we did this to record the amount payable to debenture holders. This is done at the time of announcement of the debentures redemption, debenture redemption announcement ಮಾಡುವಾಗ ENT pass ಮಾಡುದು more like the due entry. What is the journal entry for this? Debentures account, dash person debentures account will be debited. If you are paying any premium, if there is any premium on redemption, that is debited. To create a liability, to debenture holders account. Done. So this is the due entry for redemption of debentures. Next comes some additional points which were not there in preferences, but it is there over here, which is you have that reserve. Now that reserve is no more required. Why is it not required, that debenture redemption reserve? Because now you're making the repayment, right? That reserve and all was created to protect the interest of the debenture holders. Now here you don't need that reserve anymore because you are ready to repay the money to the debenture holders. So to close the DRR account, what is the entry to close the DRR account? So you will transfer it back to profit and loss account. So DRR account debit, you're closing the reserve to P&L account. Reverse the reserve basically because you don't need the reserve anymore. Then you'll also sell off your DRR investments. Invest ಮಾಡಿದ ಹಣ ಈಗ ನೀವು realize ಮಾಡ್ತೀರಿ. To record realization of, because you'll need that money for paying the debenture holders. ಅದಕ್ಕಂತಾನೆ side ಗೆ ಇಟ್ಟದ್ದು. Although ನಾವು full amount ಇಡೋದಿಲ್ಲ, 15% of the amount ಇಡ್ತೇವೆ minimum. So ಅದನ್ನು ನಾನೀಗ ಸೇಲ್ ಮಾಡ್ತೇನೆ. Sale ಮಾಡುವಾಗ entry DRR investment account will be credited, bank account will be debited. If there is a profit on sale, then it will be credited to the DRR investment or to the P&L account. If there is a loss on sale of investments, then it will be debited to the profit and loss account. Anyway, I'm not going to write it now. Just understand this is the journal entry for sale of investments. FD ಇದ್ರೆ FD break ಮಾಡ್ತೀರಿ and you will get the money. Because ಈಗ payment ಮಾಡೋ ಸಮಯ ಬಂದಿದೆ debenture holders. So 3 entries done, totally 5 entries I told you. Then we make the payment to the debenture holders. ಎಲ್ಲ ಹಣ ಎಲ್ಲ collect ಮಾಡಿ ಆಯ್ತು, ಇನ್ನೀಗ payment ಮಾಡೋದು. So to record the payment to the debenture holders. I hope you're writing it down with me. Journal entry for this. You're already created a liability towards the debenture holders. So now debited. Debenture holders account debit to bank account. Payment margin. One last thing. If there is premium on redemption, this will be written off to the profit and loss account. To close the premium on redemption, if any. If there is any premium on redemption, such redemption premium will be written off to the profit and loss account. We will have the past entries for redemption of debentures. Totally 12 entries. As I told you, the split it's 3, 4, 5. Remember it like this. So three entries at the time of issue, four routine entries, five entries at the time of redemption. What are the three entries at the time of issue? First, issue entry, bank account debit to debentures account, dash percent debentures account. Second one, create reserve, P&L to DRR account. Third one, make investments, DRR investment account debit to bank account. Fourth, fifth, sixth, and seventh are relating to routine entries, interest entries, closing the interest accounts. So one, debentures million on interest got beku. So for that, the entries debenture interest account debit to bank account. And then next entry is to receive the interest on DRR investments. So the entry is interest on DRR investment account debit to uh, rather bank account debit to interest on DRR investment account. It's an income, right? So then you will have to close that debenture interest at the end of the year. So P&L account, expense account close ಮಾಡುದು profit and loss ಗೆ debit ಮಾಡ್ತೇವೆ to debenture interest account. Then interest on DRR investment receive ಮಾಡಿದ್ದು ಅದನ್ನು ನಾನು P&L ಗೆ credit ಮಾಡ್ತೇನೆ. So interest on DRR investment account debit to profit and loss account. To record the amount payable to debenture holders. This is at the time of redemption. We have five more entries at the time of redemption. One is to record the amount payable to the debenture holders. Second one, to close the DRR. Then to record the realization of DRR investment, to record the payment to debenture holders, and to close the premium on redemption, if any. Simple 12 entries we will have to learn in this particular chapter. Okay. So now I'm not going to continue with the session as such. Let me talk a little bit to you guys. So yesterday, as you know, I mean, we have been doing these sessions for a very long time. I think this is like the third week of your classes. And increasingly, you know, I was told that the number of students attending the classes have come down for some reason. People are not interested. Students are not, you know, sitting with their phones, but not studying. Now, first thing is, who are you doing this for? Right? Are you doing it for me? I'm sure no. So don't do it for me. Don't do it for you know Ram. Don't do it for the principal. Don't do it for Vignesh. Don't do it for anyone. If you want, you do it for yourself. This is for you. So most of you have written exam once. I mean, I think all of you have written exam once and failed. What's your plan to fail again? You're showing the same, you know, the lack of interest. You know, most of you probably showed that earlier also. Now you're just continuing it. The time is, I mean, the time won't wait for you. Your juniors will become your seniors. I'm sure, you know, some of your juniors have already become your seniors, or they'll become your batchmates. So people will take, just go ahead. Don't be lethargic. Don't be lazy. I know it's not easy to sit and study all the time, but you've chosen a course like CA, which needs a lot of studies. Not just CA now, any course, if you want to stay relevant, if you want to earn good money, if you want to get a respectable career, you have to study. There's no option. You have to work hard. Because all these routine jobs that you know our parents' generation used to do, as we know, has been automated already. Computers have taken over those roles. So they don't need people there. People are needed only where you know we need this application of knowledge. So you have to learn, have to read to stay relevant. You have to study. And ask yourself this question: if not CA, if not CA Foundation, what is your plan B? So what will you do if not for this? There's no plan B for many of you. Sure, I'll do something. Sure, I have confidence in myself. That confidence will fly away very soon. I've seen a lot of kids like that. ತುಂಬಾ immaturity. That's basically immaturity. ಎಂತ ಮಾಡ್ತೇವೆ next ಗೊತ್ತಿಲ್ಲ. ಎಂತಾದ್ರೂ ಮಾಡ್ತೇವೆ. That's not how it should be. You should come with a plan. You tell me if not CA, what is your plan B? ಎಂತ ಪ್ಲಾನ್ ಇತ್ತು? ಸೊ ನಾನು CS ಮಾಡ್ತೇನೆ. CS ಮಾಡೋದು ಅಂತ ಹೇಳಿದ್ರೆ ಜೋಕ. ಅಲ್ಲಿ ಒಂದೆರಡು ವರ್ಷ ಹೀಗೆ ಸ್ಪೆಂಡ್ ಮಾಡೋದು, ವೇಸ್ಟ್ ಮಾಡೋದು ಟೈಮ್. ನಾನು CMA ಮಾಡ್ತೇನೆ, ನಾನು ACCA ಮಾಡ್ತೇನೆ, ನಾನು ಇನ್ನೊಂದು ಕೋರ್ಸ್ ಮಾಡ್ತೇನೆ. All of this needs serious studies. None of these courses are you just do it and you just register for the course and you will become you will get the degree. None of those courses are like that. All the professional degrees are like that. You have to work hard. You can say ಸರ್ ನಾನು ಬಿಕಾಮ್ ಮಾಡ್ತೇನೆ ನಾನು ಎಂ.ಕಾಮ್ just pass ಮಾಡಿ ಎಂತಾದ್ರೂ ಮಾಡ್ತೇನೆ ಹಾಗೆ ಮಾಡ್ಬೋದು but there your expectations from your own life. I always have this simple policy. I think I told you also earlier. I don't remember. So basically, if this is the graph, generally a 17-year-old, a 16-year-old, a 17, 18-year-old, when I was your age, also, including me, you included, our expectations from life is somewhere over here on the top. You want to conquer the world. You are very ambitious. You want to, uh, get the best salary when you're 24, 22. You want to own the best house. You want to own the best car. You want to be very successful. People have to respect and all of that. You have to help your family, upliftment. So the expectations from yourself is over here. It's on top. Then comes the efforts, right? So the efforts. So is it relevant? Efforts and expectation, does it have any link? Expectation is always supported by efforts. So your expectations will depend on your actions. When I say efforts, I'm referring to actions, right? Any actions, positive, negative actions. So you have to support these expectations. These are dreams we have. So you put efforts, you sit for the class, you watch the class, you write the notes, you sit after the session also, you sit into the ICA material, you go to the entries, you read the content in the ICA textbook. Those are actions. So if you're not doing it, if your efforts are low or if it's zero, if it's nil, so automatically these expectations from yourself will come down. Time, caregiver. That's how life works. Now, for example, when I started my practice, I mean, this is the case with any practicing chartered accountant, I'm sure. I mean, anyone, any career, not just here, anyone. I wanted to be the best at my field. I still want to be. I wanted to be the best in what I do, right? When I started teaching, I wanted to be the best in teaching. I wanted to, do the best I can. And I knew I can. I had that expectation from myself, that you have to be the best. Practicing, teaching, whatever, you have to be the best. Now, the expectation was there, right? Now, if I don't put efforts, I will automatically start compromising on my dreams. Now, practice also. Let's say I want to earn 20 lakhs per month when I'm 40s. Now, if I don't work very hard in my 20s, in my 30s, I will start lowering my expectations. I'll say, no, 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 not possible, that much enough. And I can't be that good also. But if I keep proving myself, right, small bit by bit, that I can do this, I can do this, I can do this, the expectations will stay there. Or it will go up. So you should always support your expectations from yourself. You should not demotivate yourself by not showing any action, any intent, any work. You should support your dreams. You can only support your dreams. You'll always say, no, your parents should support, your teachers should support. No. First thing, who can support your own dreams is you. How can you support your own dreams? By acting positively towards those dreams. Small steps, sitting and watching the class, being consistent in the class. You're not doing anyone a favor, remember. It's for you. So sit, watch classes, and you clear foundation now. I'll tell you the difference. You clear foundation in June. You will start believing that you can be a CA. You'll dream. But you don't clear foundation in June, you're suddenly demotivated. You feel you're useless. So that's how the actions and expectations and dreams have a very nice connection. So earlier you realize this, better it is. You'll start putting efforts. You'll start acting towards your dreams. Otherwise, you'll just be laid back. You'll just want to get over it. That's not how it works. You have to work hard. You have to put efforts. You have to go forward. Don't have the wrong beliefs that I'll study in the last 1 month too much. Not going to happen. Institute is not going to pass you. This is ICAI. They have their own standards. Their standards are very high. They want absolutely the best to become chartered accountants. They want people to say that, oh, you're a chartered accountant when they look at a chartered accountant. Today I was interacting with someone very senior in a very big company. So when I told him that I'm a chartered accountant, oh, you're a chartered. Oh, he had so much, I could see it and I felt very proud. That is the level of respect that the course has, and the institute wants to keep it. So how does it retain that? By making the best of best people chartered accountants. So knowledge wise, efforts wise, the way you carry yourself, all that matters. And institute keeps a close eye that you have to do all of that to become a CA. The qualification is not given for free. This is not just the case with ICAI, ICSI does it too. The ACCA Institute does that too. So all these professional institutes are very careful about the reputation of the institute. So there's a lot of high standards, lots of high expectations from an aspirant to put efforts. Don't be lethargic. Don't be lazy. Don't take this for granted because trust me, you'll regret it again. I mean, in June again. So don't do that. Okay, so please stay on track. And you already received, I think you got the notification of extension of exams today. But is there any change in your timetable? Have you seen any change in your timetable? Did not go through the notification. I think no. According to me, no, because your exams, foundation exams anyway, is in June. So what I saw was the finals and intermediate only. So your exams are as it is in June itself. So there's no change in your timetable. So there's nothing to worry. There's nothing to be happy or sad about. So you just have to prepare and get through these exams in June. And remember, if you don't clear in this attempt, you yourself will start losing interest in the course. As I told you, expectations will start dipping down. You don't want that to happen. You want your expectations from yourself to be very high. For that, you have to prove yourself every time that I should be the best. To be the best, I have to put a lot of effort, lots of hard work. So that I would say. And I expect everyone to attend, not forcibly. So someone comes and tells you, threatens you to attend class, that's why we attend class. Don't do that. Don't do that. That's not worth it. You have to do it for yourself. If you're not finding the motivation to do that, see what is going wrong. See if you're in the wrong place. See what is exactly your plan. That you will have to sit and once analyze yourself. But you have to do this for yourself, not for anyone else. Okay, so already if you've attended the classes for the first two chapters, good for you. If you have not, almost all the recorded classes are available on YouTube. Go watch them. Not just mine, economics is also over, law is over. So go watch those classes, make notes, take your ICM material, read. Don't keep all of this for end. This is technical. This is new. The crash course won't be enough for all of this. You have to sit and study this properly. This is all intermediate syllabus, which used to be there in intermediate added to foundation. So it will take time for you to learn, to comprehend. So don't take it for granted. And especially understand that this is our second attempt, right? Some of you are probably writing third, fourth, fifth attempt. You can't be lethargic. You should show that hunger at this point. I don't have to tell you all of this. You should understand all of this on your own. You can't just be lazy. You can't afford to lose another 6 months. So please, be disciplined and attend the sessions regularly. All right. So I'll do one thing. I'll stop over here. We'll continue tomorrow. We'll do problems and all. If I start a problem today, I'll not be able to finish it. So I will discuss it tomorrow. But go through the entries once. 12 entries I discussed. So go through the 12 entries properly and see you in the tomorrow's class.